Hello and welcome to CMS Forex Daily Video Recap. I'm your fundamental market analyst, Nick Nassad. Today is Monday, August 9th, 2010. We come into this week with traders and investors focused on what we will see from the Fed when Bernanke and the rest of the Federal Open Market Committee conclude their interest rate setting meeting tomorrow. Confronted with a U.S. economy that appears to be decelerating, the Federal Reserve may ratchet up cautionary language, but many expect the central bank will refrain from buying more bonds to bolster growth. The pace of the recovery has been slowing, which is putting a lot of pressure on the Fed to act in order to ward off a double-dip recession, as well as falling consumer prices known as deflation. The most likely scenario will be that the Fed will stress that they are aware of the downside potential to the economy, which will cause them to forecast a slower expansion, meaning a downgrade of the economic outlook, but may not say that there is a new danger emerging, aka a double dip. While they will signal to the market that the ultra-low interest rates that we have all come to expect will be on hold for a very long extended period, the one step that they could take would be to reinvest the income from mortgage-backed securities it holds back into the bond market. While this is not outright quantitative easing, this will still be a looser monetary policy stance, as the Fed had originally planned to let its portfolio shrink as these mortgage-backed securities came to maturity. Taking a look at the currency markets, first up, the euro-dollar pair, we see that in the previous few weeks we had seen the euro gaining on the dollar. In the past few weeks, on the expectation that the Fed will take these steps in terms of the semi-quantitative easing we had just talked about, ever since it was suggested by a Wall Street Journal article about 2 weeks back. On Friday, that speculation was bolstered by the weaker than expected monthly jobs report, the non-farm payroll report, and we saw the euro breaking above the 1.3260 area and hitting a high around 1.3330. Now, in today's session, however, we see that the Greenback managed to pair some of those losses from Friday, and we may be seeing traders actually hedging their bets about the Fed. There may be some feeling also that the recent losses by the dollar may be overextended, and that the Fed may surprise markets if it simply nods at the risks to the economy without saying that it will reinvest the proceeds of maturing mortgage-backed assets on its balance sheet. In fact, overnight we had a pretty strong news release from Germany in terms of its trade balance, and European equities roared higher to start the week, so that would have suggested that the euro would gain against the dollar, but instead we still had the dollar gaining during the late European session and in New York trading. If we take a look at the dollar-yen pair, we see here too that the greenback gained against the yen, part of that having to do with higher equities, which increased risk sentiment, but mostly it seems to be a reflection of the stronger greenback in general. The pair now tests this short-term downward sloping resistance trend line, and we could see that our rally paused at that level. The pound-dollar pair slid today as well, again as short-term traders perhaps hedge their bets about a super dovish Federal Reserve, and traders seeing the pair perhaps a bit overextended and unable to move above the 1.60 level, which we had tested in late Friday and also overnight in today's session, instead decided to sell the pair and consolidate further, as we have seen some sideways trading in this pair following a very strong rally over the last few weeks. The US dollar-Canadian dollar pair, meanwhile, traded in a very tight range, as you can see here, with our resistance at the 1.03 level and support coming from our 200-period simple moving average in the 1-hour time frame. Here, stronger equities and a 1% rise in the price of oil helped to boost the value of the Canadian dollar and also limit the greenback strength, which we had seen in some other pairs. So we were pretty much trading at a standstill, and we consolidated some of the gains in this pair that we had seen in the greenback following Friday's trading. If we zoom this pair out a bit, we also see that today's resistance came at a pretty nice Fibonacci retracement level of our most recent downswing right here at the 38.2% area. So that's a quick look at the market to start the week. As I had mentioned, we didn't have really too much in the way of fundamental data, except from what we saw in Germany, where the trade balance for the month of June, where the country registered a 12.3 billion euro surplus in seasonally adjusted terms. Exports rose 3.7% following a 7.9% climb in May. So that is a positive for the German export sector. Germany is benefiting from a weaker euro, which makes all European goods cheaper abroad. Trade with Asia is said to be back above pre-crisis levels, and incoming orders point towards good growth numbers going forward. The recovery, therefore, is becoming more broad-based and stronger, at least in the largest economy in the Eurozone. Germany's second quarter GDP comes out on Friday, and expectations are for a 1.3% quarterly gain, following a 0.2% rise in the first quarter. So now let's take a look at the upcoming fundamental docket. Tonight at 7 p.m. the UK will post its BRC retail sales monitor as well as a measure of housing prices. At 9:30 Australia posts a measure of business confidence. That will be followed by the Bank of Japan interest rate decision as well as trade data from China. Overnight Japan releases its preliminary machine tool orders, and the UK posts its trade balance as well as a leading index. Tomorrow in North America, we start with housing starts and housing price data from Canada, as well as preliminary non-farm productivity and labor costs from the U.S. 10 a.m., the U.S. posts its wholesale inventories, and at 2:15, we get the aforementioned FOMC interest rate decision and statement. So we look forward to seeing what the Fed will have to say and how the market reacts. So join us tomorrow for tomorrow's daily recap, where we will go over all the developments. And with that, we conclude Monday's daily video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for tuning in today and wish you good trading.